Hi traders, this is Blake Morrow, and you are listening to the week ahead video for March 10th, 2024. I'm going to try to make this a quick one, just because not as much happening this week as there was last week, but we still have a lot to cover. I just want to say this though, if you're looking at our website and you say, well, you know, that looks a little different, that's because we have something really major coming up on the 20th of March. So make sure you're listening to the Face Show. If you're listening to the Face Show, you're gonna be there for a big reveal that we're launching here at Forex Analytics. It's going to be a big event. It's something that we've been working on for the last several months. So I'd like to see you all there. If you're not registered for the Face Show like normally, then make sure you register. You can register right here and grab the link. It'll take you right to the webinar link. Or, you know, if you watch us on YouTube or whatever, however you decide to watch the Face Show, just make sure you're there on the 20th. All right. Now, I do want to talk about this week because, you know, it may not be as big of a week as far as data goes, but it is CPI week. So CPI week is a big week for the currency market, especially when everybody's trying to figure out when the Fed is going to be cutting rates, or if they're even going to cut rates. So the inflation data this week is going to be a big deal. Also, one thing I do want to mention, and this will kick us off with the weekend or on Sunday, it is daylight savings shift. So it's spring. We spring forward. Is that what happens? I live in Arizona and my clocks don't change. So everybody else kind of adjusts around me. But all I know is we do have U.S. time change, daylight savings shift. It's going to happen this weekend, and then I guess in a couple of weeks, everybody else does. So there's going to be a little bit of disparity. So just remember, all of our shows. I'm sorry, I should rephrase that. Our Face Show is during East Coast time. So just at that time, just changes with us. So because we do a time change this weekend. So mind that for those of you that are trading the markets. All right, let's talk about Monday, and let's go into, I want to talk first and foremost in Norway, and let's talk about the US dollar, Norwegian krona. We have, on Monday, we have Norway inflation. All right, so that's going to be one of the big movers just to kick us off for the week. Now, what you'll notice with the US dollar, Norwegian krona is we actually hit the 618 retracement. Now, we bounced very aggressively on Friday. We got a huge rally off of that 618 retracement. One thing I want to just talk about with the US dollar, Norwegian krona, it's a lot like the a lot of these commodity currencies. They are holding up, you know, how should I say? The dollar is holding up very well against these commodity currencies, despite this you know, move in risk assets. Because if you trade the US dollar, Norwegian krona, you would think that with the stock market being as strong as it has, you would have seen the US dollar, or excuse me, the Norwegian krona strengthen quite dramatically. Well, that hasn't been the case. And what you're going to also notice here is we have a simple ABCD equal leg move at the 618 retracement. We're getting an aggressive bounce from there. So a lot of support in the US dollar, Norwegian krona. I would argue as long as we're above 1030, 1030 being the 1030, you know, the price is looking to, you know, rally again. Now I'm going to go into why I think that with the US dollar throughout the course of the show. So make sure you all stick around for that. All right, moving right along, let's go ahead and move over to our, well, what else is happening on Monday? Well, actually, what's happening throughout the course of the week, and I'm going to just shift us over to the dollar. The next Monday, Tuesday, Wednesday, there's going to be 117 billion of new treasury issuance. You know, that's been one of the things about the markets this year thus far. We've seen so much issuance come out from the treasury. So we got a 3-year auction on Monday, but take a look at the dollar. The dollar actually sold off on Friday. You know, following the jobs report, we saw the dollar, you know, sell off, but it also found buyers at the 618. Very similar to, let me just show you again, the US dollar, Norwegian krona, right? 618 retracement, US dollar, ironically, which happens to be part of the US dollar index, the US dollar, Norwegian krona, also hit the 618. So did the dollar index. Now, one of the things that if you're looking at the dollar, we have to pay really close attention to is the fact that stocks, I don't want to give up on the stock market yet, but because we saw some profit taking on Friday, the dollar actually picked up a bid. And I do think that these are attractive levels to be on the long side of the dollar as long as we stay above the 618 retracement. So basically what I'm trying to say here is we should not break back below the 618. And if we do, it should be very brief, just at channel support. But remember, we have a lot of data coming out this week, and that will take us into Tuesday. We have CPI data. Now, as far as the CPI data is going, you have to imagine that most economists are expecting inflation to continue to weaken. So they're expecting a little bit of, stabilization to weaker CPI. The core CPI is supposed to dip down by 0.1% to 0.3% month over month. CPI, the headline number, is supposed to stay at 0.3, maybe even 0.4%. So we're starting to see it stabilize a little bit. I believe that the risks are tilted to the upside for inflation. We've seen inflationary data come in a little hotter. Wage prices aren't coming down. So just focus on inflation data. If it comes in hot, the dollar is probably going to just turn around and rally back to the 50 DMA. But with that being said, you have to realize that we are in a descending channel. You can see it in the dollar index. So any move back up towards 103.30 or so should find some sellers. And that's possible, especially even following a hotter inflation report. But just also keep in mind, on Thursday, we have producer prices. All right, moving right along. One of the other things that's happening Tuesday morning, is Mexican industrial production. Now that's going to happen before CPI, but I do want to talk about the US dollar Mexican peso, because the US dollar Mexican peso found some support here at the 1680 level. Now it made sense to me, even though I do believe that the US dollar Mexican peso, whoops, I didn't want to grab that. I believe the US dollar Mexican peso is going to turn higher. Right, I believe it's still going to turn higher. The one reason why it just continues to, drift lower is because stocks are so strong. Stocks are so strong. You got, traders, institutions that are, trying to play the long carry, which makes sense. You buy Mexican pesos, you sell everything else. And so it makes sense that we've drifted down here. But the one thing that you haven't seen is, even though stocks are at all-time highs, and let me go ahead and grab this really quick and do this. Even though stocks are at all-time highs, the dollar Mexican peso hasn't broken down. And that is a risk for anybody who's on the short side. I'm talking to you, Mr. Institutional Client person that's playing long carry. If you start to see stocks move down, the dollar Mexican peso is going to turn right back around and head higher. Now, obviously, there's a couple big levels of resistance for the dollar MEX. That's going to be the 50 DMA, more importantly, the 200 DMA that comes in around 1723. That's going to be huge resistance on any turn higher. I wouldn't be too worried about it while we're below the 200 DMA, but we get above that 200 DMA, and I don't think you want to be on the short side of the dollar MEX anymore. You probably see a relatively strong squeeze at that. All right, going into Wednesday, we have UK GDP. Now, last week we talked about this triangle developing, potentially a rounded top. Well, the rounded top, like I said last week, if you saw last week's video, I said, it looks like a rounded top, but the fact of the matter is the sterling against the dollar was not moving down as the euro was. So it made sense. As soon as the dollar weakened, you saw the sterling squeeze higher. We came out of that triangle. We talked about this consolidation and that we'd get a breakout. Well, we did. Now, UK GDP should confirm this move. If for some reason we get a weak GDP number, and on Tuesday, you got to start looking for a potentially false breakout in the sterling. Now, one of the other things that we will pay attention to, looking at the pound dollar rather, you'll notice that we are coming up on the 78% retracement. That, I believe, is going to be really key resistance. Not only because it's the 78% retracement and sterling likes to stall. So let me say this closely. The sterling likes to stall, and it does respect its 78% retracement more than most currency pairs out there. The other thing is it's really close to 130. So you got, you know, the 78% retracement, 130 just above it. You're going to find some sellers as we approach that level, especially coming out of this triangle. You look at like the triangle. Let me grab this real quick. And what you're going to notice is that coming out of this triangle, that target would actually take us to, you know, the 78% retracement, or very close to 130. So what I'm trying to tell you is any move towards 130, you might be wanting to look for a sell in pounds or sterling following the UK GDP data. Now on Wednesday, we also have the 30-year auction. Oh shoot, did I mention that? On Tuesday, we have 10-year auction notes. We have a 30-year bond auction on Wednesday. I'm not sure if I mentioned that, so I just need to make sure I did clarify it. And by the way, if you guys like these videos and you think they're very beneficial to helping you guide you through your week in the markets, make sure you give my team a big thumbs up. Also, jump down in the comments below in case I do miss something, because I don't catch everything. Do you know what else is happening? Wait, the 13th, I believe, is on Wednesday. You know what else is happening? Is that Wednesday? Let's see, 11th, Monday, Tuesday, Wednesday. Yeah. Japan's wage negotiations are going to be wrapping up on the 13th. So, you know, we're gonna talk about the yen as soon as I'm done discussing this about the bond market. But I just want to say, if there's something I forget, make sure we talk about it, or make sure you bring it up here, and so we, you know, down in the comments below. So this way, I don't catch everything. I think I can catch everything. I think I get most things, but every once in a while I forget something. Speaking of which, let's go, because these unions in Japan are wrapping up their wage negotiations. We could actually see, especially that a lot of these unions are raising their wages. That's going to give the BOJ the ammo to come out of negative rates, we believe. And this could spur more yen strength come next week as markets are anticipating the BOJ to move this month. So reason why I mentioned this, wage negotiations could be a big mover for the yen. Let me, you know, instead of talking about the dollar yen, which I should, and matter of fact, let's go ahead and figure out where that 50% retracement is, because it is upcoming, right? The 50% retracement, see this big dotted line right here? This one, all right, oops, did I move it? I didn't move it. This one right here, this one right there. That one's going to be a big one, meaning we get below that. We get below this 145.80 level. That's going to expose more yen strength, because you see that spike low right there? That's support, right? It's support. It's a big pivot. You can see it from way back over here on early September. So we break through that level. Man, oh man, we're gonna see some selling come in to the dollar yen, or more yen strength. Now, if you look at the 6J, just to give you a kind of a broader look at the yen, we have a big wedge developing, and you can see the 200 DMA is coming up too, like on the 6J. So you just look at that level, and you know that if we start getting above the 200 DMA in the yen's probably going to squeeze. Keeping in mind the BOJ decision is later on this month. All right, continuing on. Thursday. Now we're going to get this, you know, kind of double whammy, as we have producer prices also being released this week. Not just CPI on Tuesday, we got PPI on Thursday. And you'll notice that the euro finally broke this range. We were talking about either above or below, you know, this red line right here, or this above this black line right here. We got it. Now, I want to show you something, because, you know, we completed that head and shoulder pattern. We might as well just move that out of the way. Let's move that. Okay. Let's move that over. All right, you guys with me? What fib level was this that we stopped? Do you see it? It was a down by the dotted line or dashed line. Do you see it? It's a 618 retracement, right? Guess what we're coming up to right now? That's right, the 618 retracement. So it's really important, right? The euro dollar already just proved to you that it actually respects the 618, and we hit it on Friday in reverse. So keep that in mind. So PPI data, especially if the data comes in a little hotter on a producer level. But you know what else comes out on Thursday? Unemployment claims. Yeah, but what else? Retail sales. You've heard me say this before. And if you listen to our daily shows on the Face Show, do you know how to find that show? I know I've talked about it already. It's right over here. You know, if you want to find our Face Show, you can register for it right on our front page, because you got to be there on the 20th, because we already talked about that. But we have the Flow Show, we have the Face Show. Both of them are free. And if you've heard me on the Face Show talk about this, about the strong 618 retracements. You talk about one of the things that you hear me say all the time about the U.S. consumer is it's really tough to bet against the U.S. consumer, right? I mean, U.S. consumerism is actually a thing, believe it or not. And so when we have retail sales that are coming out, and the market is looking for a bounce back, is it from the previous month? Is it possible that we even get a stronger bounce back in retail sales? Yeah, I mean, it is. And that's why you have to be careful of what the dollar is doing going into Thursday because of that. All right, on Friday, we wrap up the week with Empire State Manufacturing, industrial production, University of Michigan consumer sentiment, and inflation expectations. So all that is going to wrap us up for the end of the week. A couple other currencies I think we need to be discussing. One of them being the Aussie dollar. The Aussie dollar has rallied quite substantially after you could say after invalidating that head and shoulder pattern setup. Now the risk here, because the Aussie dollar has bounced back so aggressively, and we basically invalidated a head and shoulder pattern setup, that means anybody who was trading it on the short side using that pattern probably was stopped out this week. So in my opinion, what's going to be fairly important is how the Aussie reacts to risk, because it makes sense. Stock's been moving higher, risk appetite's getting better, the Aussie's playing a little bit of catch up, but you notice we can't even get back above the 50% retracement. If you ask me, the Aussie still trades very, very horribly based on where stocks are at right now. And that's got to be a point to be thinking about in the event that stocks actually start rolling over. And that's why you got to pay attention to what's happening in the Aussie dollar. One of the other things that I wanted to talk about, because last week we had some inflation data out of the Swiss franc, out of Switzerland. The Swiss franc, we had this little double top we talked about a couple of weeks back. Well, you know what? We couldn't even break back below 87.30 right there. And because we couldn't, even after all the dollar weakness we saw last week, after inflation that wasn't as weak as the market was expecting, even with all of that, the dollar Swiss is failing to break down. That just tells you how much appetite there is to sell Swiss francs, which, if you've been listening to this show, the week ahead video, for all of 2024, that means the last 2 months, I've been very, very bearish the Swiss franc. And you can see it really just price action tells you it still is. We're going to be using that a little bit later, so make sure you all stick around. Let's talk about some other markets that have been moving. One of the other big markets that have been moving, oh my God, last week we pointed out that gold was breaking out. Well, we continued this breakout. But, and I'm going to give you the buts, all right? You see that big range we were in? Basically from, 2020, post or pre-COVID, right? Look at where we're at right now and look what extension we're hitting. Basically, 2200 is the 127% extension. I would argue that the daily RSI, and let me get rid of this really quick. The daily RSI is getting to levels that are nosebleed for gold. And because it's getting towards nosebleed sections for gold, you're probably near a high in the gold market. So does that mean you should be short gold? No, not necessarily. I think gold still you want to be buying on dips, but if you just bought gold, you need to be a little bit careful with that. And what else do you need to be careful with? If gold stalls up here, what else do you need to be careful with? Probably being short the dollar, because if gold actually pulls back a little bit, the dollar is probably catching a bit of a bid going that direction, right? Okay, continuing on. Crude stalling at 80 still. 80. Any move above 80? Where is my crude oil anyway? Oh, there it is. Any move above 80 has found sellers. Crude is very, very, very choppy. I thought we were going to get a little bit more of an extension here in crude, but it's been very sloppy. And like I said, any move above 80 is still finding sellers. Not really too sure what to do with crude oil at this point, but I think it's probably better left untraded, right? All right, let's also talk a little bit what's happening with the yields. Last week, we talked about yields breaking down. Remember last week's week ahead video, we talked about yields breaking down. Well, let's take a look at what's happening in yields. They continue to break down. So now, if you look at what's happened here in 10-year, let's just zoom in a little bit and think about this for a moment. You had a range extension in the 10-year. Last week we said, hey, yields are breaking down, right? We were right where that red candle was last week. Yields continue to break down, and guess what? We've completed a range extension on the 10-year. So what does that mean? Well, it means the risk is increased that yields start to bounce. Now, why would yields bounce? Or what could help yields, or what would happen if yields bounce? The dollar would firm up. And I've already showed you reasons why in the euro, maybe in the sterling, in the Aussie, why the dollar could firm up a little bit. Well, here's a good example of why that could happen. 10-year yields just completed a range extension. We might get a bounce. I'm assuming this is probably pretty close to a 50% retracement if I had to guess. And it is. It's at the 50% retracement, as you would expect. Okay, continuing on. Also, gold's been going up. Bitcoin. Look at Bitcoin. I should probably pull up Bitcoin on a... let me pull up Bitcoin on an exchange that is trading right now. We're going to use, instead of Oanda, which is not, we'll use Binance. We'll grab that data feed real quick. And you see Bitcoin, trading, up towards 70,000. It looks extremely bullish. I mean, I don't know what's going to stop Bitcoin at this point, but price action does suggest that we're going to continue to hit new all-time highs. And so it seems like a matter of time that we will be breaking 70,000 and, marching our way marching our way up towards the 80,000 level. So Bitcoin continues to be strong. What would change my mind in Bitcoin is if we got back below 60,000. We got back below 60,000, we'd have to think that maybe this run is over. All right, so let's review last week's setup. So this is going to be the point in the video where we talk about what happened last week in the setups, and then I give you the best setups of the following week. So last week, we talked about the breakout looming for the pound. So if you were patient and you waited for the breakout in sterling, you got it. Whoops, I didn't want to, let me remove that. You got the breakout in sterling. Now, again, the risk, I believe, is that you're getting towards that 78% retracement, that 130 level. So if you are long sterling because you're just patiently waiting the breakout, good for you, and trading well done. All right, the other thing that we were waiting for, we had a setup. Remember, it was a setup. I gave you a couple of setups last week. I said, I'm not just going out and buying sterling. I wasn't just going out and buying the euro pound. I said it was setting up as an inverted head and shoulder pattern. So we had this inverted head and shoulder pattern in the euro sterling, but guess what? It didn't. Whoops, that's not the way I wanted to do it. I wanted to do it this way. Hold on. we had that set up, but it did not ever break through the neckline. So invalidated, nothing happened. Last but not least, review from last week. We also said short the Nikkei only below, and I had you write down the number, 38,900. So let's see what happened in the Nikkei. I don't believe it did. 38.9 never happened last week. We never got back below this dotted line. So nothing happened. You didn't take the trade. But I don't want you to ignore this, because I still think that this is a risk, especially coming out of Japan's wage negotiations this week, especially with the BOJ coming up in the next couple weeks. I would expect that the Nikkei starts to underperform. And so the risk is potentially for a breakdown. All right, this week's setups. Are you guys and gals ready? I'm ready. Okay, I'm going to give you a bonus one this week. Are you excited about that? If you are excited about getting a bonus trade setup for the week, give me a thumbs up and say, yeah, Blake, thank you. All right. Or sure, great, whatever. Thumbs up would help. All right. Doesn't cost anything to give me a thumbs up. It also doesn't cost anything to subscribe to the channel. Subscribing to our channel is free. Hitting the bell icon and being notified when we release these videos is also free. So just go down below, hit subscribe, and then this way you'll always get these videos as soon as they are released, as soon as they come out of editing. All right, so first setup, short the euro while below daily close 110. So while we close below 110, actually I should probably say 110.07. While we have a daily close below 110.07, you want to be on the short side. That's first setup this week. Second setup. It's Saturday morning right now, and I was at a soccer game really early this morning. Football, for those of you that are outside the United States. Anyway, so it's already late in the morning because we got up at redonkulous hours this morning to go to this game. Anyway, what was I going to say? Oh, the next setup will be the Aussie yen, and a break of the 50 DMA, a daily close below the 50 DMA. You got to look for a short. Japan's wage negotiations, BOJ upcoming, and I believe the Aussie still trades like crap. So to me, it looks like a really ripe short on a daily close below the 50 DMA. Moving right along, third setup number 3. Long Euro Swiss while above the 200 DMA. You guys know, most of you know, this has been my trade pretty much of the year. Still have his inverted head and shoulder pattern. One of the other things that is not drawn on here, which I don't know why, but I'll draw it right now, is we are above channel resistance. In case you haven't seen this, on our daily shows, I've been talking about this, right? So while you're above this, channel resistance, no reason to be on the short side. You want to be buying dips while you're above the 200 DMA. So basically, while you're above 95.50, you want to be on the long side. I believe that will continue higher. But the fourth and bonus setup, which I think I like even better, is being long. And I'm already long, by the way, the Euro CAD, because I got long a couple of weeks ago. Remember, I drew this out for you. Remember? Do you guys remember this? You have to go back like 2 weeks, maybe 3. When I said we have a bull flag pattern, I'm still long. And guess what? I'm looking to add. You might ask, why, Blake? Why are you looking to add? Because what happens when you break resistance? So I'm looking for the Euro Canadian to continue to extend its rally. And whenever it looks like, hey, this looks like a fresh new trade, that means that it's good for me to be adding. You start breaking above this 50 DMA, we should probably trade closer to 150 in the weeks ahead. So 4 setups this week, that deserves a big thumbs up. Short euro dollar well below 110.07. 110.07. Short Aussie yen below the 50 DMA. Long the Euro Swiss as long as it's above the 200 DMA. And long Euro Canadian on a breakout, looking for a move towards 150 in the weeks ahead. If you guys and gals think that these videos are great for you and it helps you prepare for your trading week, make sure you give me a thumbs up. Make sure you're on the daily show, the Face Show, March 20th. It's a Wednesday. The reason why that's going to be such an important show to be on, because we have the Fed decision that day as well. So make sure you're on the Face Show so we can prepare you for the trading day ahead, but more importantly, for the announcement that we have, the exciting news that we have here at the Forex Analytics community and team. So guys, gals, I want to thank you so much for being with me today. Hope you enjoyed the video. I hope you have a great remainder of your weekend, and I'll see you next week. And if you're in the Forex Analytics community, I'll say this: if you know, you know, next week is set to be very, very big volatility for one really good reason. And like I said, if you know, you know. And if you're in the Forex Analytics community, you know exactly what I'm talking about. All right, guys and gals, have a great one. I'll see you next week at some point. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.